Good morning everybody and welcome back to episode 91 of Open Crypto, where I keep you informed twice a day and fully up to date on all things crypto. If that sounds like something you'd be interested in, then subscribe to the channel. I put out a new video every 12 hours. So today we're going to be talking about CNBC's article. It's from their tech section and it's titled "Crypto Exchange Huobi to Lay Off 20% of Staff as Industry Reels from FTX Collapse." This is written by Ryan Brown. Let's get straight into it. Justin Sun, a Huobi advisory board member, said the crypto exchange plans to reduce its global headcount by about 20%. Huobi's native HT token at one point sank as low as $4.30 on Friday, down more than 7% from the 24 hours prior. It comes as floods of investors have piled out of centralized exchanges after the collapse of FTX. Digital currency exchange Huobi on Friday said it plans to reduce its global headcount by about 20% in the latest round of layoffs to hit the beleaguered cryptocurrency industry. The Seychelles-based company is one of the largest crypto exchanges globally, handling about $370 million of trading volumes on a single day, according to data from CoinGecko. The planned layoff ratio is about 20%, Justin Sun, a Huobi advisory board member, told CNBC, adding the cuts have not yet been implemented. With the current state of the bear market, a very lean team will be maintained going forward. The personnel optimization aims to implement the brand strategy, optimize the structure, improve efficiency, and return to the top three. Huobi had about 1,600 employees worldwide as of October. Huobi's native HT token at one point sank as low as $4.33. We've already said that, so they've repeated some information there. After the collapse of FTX, crypto traders are scanning for clues as to what will be the next company to fall prey to the downturn in digital assets. Now, it's important to remember as well that it doesn't mean that there's next company. There could be two or three companies that fall at the same time. Usually, when a big company goes down, it can, just like dominoes, when you push a domino over it can fall very quickly. You can get a very quick contagion effect because you tend to find after that they've all kind of intermingled with each other somehow, doing loans to each other and stuff like that. So when one goes down, they can't afford to pay the loan, and then they've realised that they've lent out too much from what they should have done, and so now they have to go down, and it's just kind of like that. When you get big things, it's no different to say like the Enron scandal and the fallout from that, or the Lehman Brothers in 2008, and we all remember what happened then. So and it's also important to note that I don't really, my personal opinion on Justin Sun and his Tron token is, I don't hold him in high regard. I see him as a bit of a scammer. He just doesn't, he just doesn't strike me as somebody who cares about crypto. He cares about getting sort of US dollars, and he cares a lot about his reputation, and not in a good way. I mean, he cares about his ego, I should say, not his reputation. So that's all I'll say about him, because he's not really that important, to be honest. Last month, Binance briefly paused withdrawals of the USDC stablecoin, prompting concerns over its own ability to cover client redemptions. It has since resumed USDC withdrawals. Now, I've seen a few interviews with CZ, who is the CEO of Binance, and he said that the problem of this was, he has since said, I should say, didn't say at the time, but since he said that there was a problem with the US banks, and that the trading house or the clearing house that he uses to swap, for example, his, any token, I think. Well, not any token, I think it's just the other USD token, so Tether, Binance USD, when they want to transfer it into USDC, they have to wait for the next day for the bank to open. But obviously Binance trades on a 24-hour basis. You can trade crypto at 3 o'clock in the morning if you want on Binance, but when they do their clearing after, they realised that they didn't have enough USDC to service withdrawals, but it wasn't because they didn't have the assets. It was just because the bank hadn't opened the next morning in the US, and so that caused a problem for them, a temporary problem. And it seems to be the case because since they have resumed withdrawals, and also I've seen an interview with somebody from the bank that said that was also the case. So it looks like that's what happened, and withdrawals are back on at Binance. As much as $6 billion in digital tokens were pulled from the exchange between December the 12th and December the 14th. In a so-called proof of reserve statement on November the 25th, the world's largest crypto exchange revealed it had a ratio of 101%, indicating it had more assets than liabilities. Doubts have been raised about the effectiveness of proof of reserve reports, which offer only a snapshot of the assets in an exchange holds at a single point in time. Consultancy Mazars, which had compiled a separate proof of reserve report for Binance, stopped producing such documents altogether for crypto firms on December the 16th, citing concerns regarding the way these reports are understood by the public. Lately, crypto investors have raised doubts over Huobi's financial health. I think a lot of companies, including exchanges, are just being over leveraged, and they are trying to make it through, because we've had such a terrible year in crypto with in regards to the price action. I think they've thought it was going to go up forever, and they've left themselves over leveraged, and now they've been caught with their with the pants around their ankles, and they're not sure what to do. And I think they're just trying to survive and trying to put out positive messages and saying everything's FUD and everything else. And I think that the truth is that a lot of them are in a lot of trouble. But we'll see as things play out. Sun dismissed concerns over the company's solvency as pure FUD, meaning fear, uncertainty and doubt. A phrase crypto investors use to describe what they perceive as negative or false information. Users' assets are safe, he said. As a virtual asset trading platform that has been in operation for 10 years, Huobi's business philosophy is to protect the safety of its users' assets. This users' assets are safe is a famous saying now in crypto, and it's almost always a lie. We've found out the hard way. So we'll see if Justin Sun is telling the truth and he's the exception. I doubt he will be. Huobi has completed a proof of reserves review that shows its total assets now stand at $2.9 billion and match the number of funds deposited by users, Sun said. Huobi was acquired by About Capital Management, a Hong Kong-based asset management firm, on October the 7th. Sun, who founded the Tron blockchain project, serves as an advisor to Huobi. Huobi was originally founded in China, but it was driven out of the country after an intense crackdown from Beijing on the crypto industry. Today, Huobi only does consulting and research out of China, while its trading operations are run outside of mainland China. The company has offices in Hong Kong, South Korea, Japan and the US. So another more bad news. Well, it is bad news because people are losing their jobs, but it's more bad news generally because it's just another company that's going through difficulty in the crypto. And Huobi has been around a long time. Ever since I got into crypto, it's always been around. So it'll be a shame if it does go under. So that's what I've got for you this morning, guys. Remember to please subscribe to the channel. Thank you for watching and listening. Join me and I'll keep you updated on all things crypto every 12 hours. Smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.